bought 30,000 Bitcoin at a price of around $65 at the time. And we had other investors come in around that time too. And as you can imagine, it's probably the best performing hedge fund of all time, over 100,000% returns. Been 10 IPOs in the cryptocurrency ecosystem, and we've been part of 5 of them. We targeted like $200 million, and we ended up with a 25 or so $1 million fund after 3 years of fundraising. And we really believe that AI is not going to be reaching its full potential without crypto. We have over 300 billion fiat, one-to-one back stable, dollar-backed stable coins in circulation. And then the next currency that has any traction is the euro one-to-one backed, and that's at like 300 million.
Welcome to Onchain Capital, your front row seat to the future of finance. From Web3 and AI innovation and digital asset policy to the power shift between East and West. Today, we're unpacking it all with Paul Veradittakit, managing partner at Pantera Capital. Paul, thank you so much for coming on the show.
Sean, thank you for having me. I'm excited to be here.
So, Paul, for those who may not really understand Pantera, you are the first U.S. institutional fund to go all in on blockchain. And now you have a fund, number of funds that manage over $5 billion of assets, including some really well-known names like Circle and Ondo and Arbitrum and whatnot. So for the audience, what is Pantera, and where's Pantera today from all this journey that you have gone through within the fund?
Thanks, Sean. That's a good question. So Pantera is one of the earliest, and I think the leading crypto VC in this entire ecosystem. It was started by Dan Moorhead, who used to be CFO and head of global macro trading at Tiger Management. So Dan really had the conviction to really say, hey, this space is going to be transformative. It's going to start with Bitcoin. Bitcoin is a better store of value than gold. And there's going to be, use cases that stem from this. And we have to really, first of all, he saw this as a problem. He wanted to first get exposure to this space by personally buying 30,000 Bitcoin. And as he was trying to do that from Coinbase at the time, he was running into $50 daily limits. So you can only buy 1 Bitcoin a day. So instead of waiting 30,000 days to buy the Bitcoin that he wanted, he felt like there was probably another route to do so through an exchange. But then you have to figure out which exchange is legitimate, and then of course, like, how do you sort of think about custody? How do you think about reporting and taxes, which we didn't even know how taxes work in Bitcoin back then. And so he was like, well, look, why don't I partner with some good friends, guys at Fortress and others, and why don't we launch a fund that would basically act like an ETF? It would make it really easy for high net worth individuals, institutions to buy Bitcoin. There wouldn't be this 1 Bitcoin a day daily limit, and we would partner and invest into an exchange to basically facilitate the liquidity and trading, and make sure that we were comfortable around counterparty risk. And so Pantera actually became the largest investor, and Dan was on the board of Bitstamp. So we utilized Bitstamp to facilitate liquidity for this Bitcoin fund. And then we even started designing our own cold storage multi-sig solution using security experts and all this kind of stuff that you sort of have to think about when you buy that much, assets, and you want to service institutional clients and working with top auditors and all that sort of, all those sort of things. And, eventually got to a certain point where, we started to use portfolio companies and vendors to basically solve that problem. But nevertheless, the Pantera Bitcoin Fund was founded in early 2013 as a way to solve Dan's problem, and it bought 30,000 Bitcoin at a price of around $65 at the time. And we had other investors come in around that time too. And as you can imagine, it's probably the best performing hedge fund of all time, over 100,000% returns. And then Pantera eventually started to look at companies within the digital asset space. And so we actually made early investments right before I joined, we were in the seed round of Ripple. We were in early rounds of Circle and Zappo and some other stuff. And just to kind of, without getting into the details, because we'll get into it later in terms of investing along the way, but we've then created venture capital funds that now we're on our fifth venture capital fund, which we're sort of raising right now. And before that, our fourth venture capital fund was $1.3 billion. We also have hedge funds that help to give investors access to tokens, whether they are public tokens that are, top 100 or 200 that have quite a bit of liquidity, and we can actively trade in and out, long, short. We also invest early on into token projects like Algorand. We kind of go in their pre-sales, and then we eventually exit out of our positions when it makes sense, hopefully at in a long time and much higher multiples. And then we've gotten into digital asset treasuries, which we'll talk about a little bit later on. And then we also provide liquidity to protocols, knowing that we had the scale and the just the innovation to try to figure out ways to help the ecosystem and get compensated for it. We also now have been doing not only early stage investments, but growth stage investments due to the size of our fund, even pre-IPO rounds. So the way that we think of ourselves is we cover the whole spectrum in terms of early stage all the way through IPO. And when I mean IPO, I mean there's been 10 IPOs in the cryptocurrency ecosystem, and we've been part of 5 of them. And then, of course, from a type of asset liquidity perspective, we're happy to be actively trading, to doing like treasury deals and early stage token deals, and providing liquidity that are sort of more in that like 1 to 4 year time period. And then, of course, all the way to the 10-year like long-term venture bet that again will result in IPO. So that has led us to managing now, depends on the day, we're probably between like $4 or $5 billion, and it's been an amazing journey. I mean, we are now about 80 people across New York, San Francisco, Puerto Rico, and we really do not only invest, but we have a whole portfolio services team that really helps out our portfolio companies scale, especially in 5 areas that we believe are most crucial for crypto native companies. It's around recruiting, legal, regulatory, research, tokenomics, business development, and marketing.
Amazing. So I have been a long-time reader of your newsletter, so I've really followed along with the journey, not only from Pantera perspective, but also more importantly from your perspective. And my understanding was that back in the day, I think you joined in 2014, somewhere around there.
Correct. Correct.
So when you joined Pantera, before you did that, you were very heavily involved in the mobile industry.
Yes.
And obviously the last decade and so in the blockchain digital asset industry. Do you see this industry evolving into something different given where we are now in 2026 with obviously institutional coming in heavily, you talk about regulation as one of the five core kind of pillars that you guys focus on as well. And obviously, regulations around the world are going that. And then also the advent of AI, right? Agentic payments and so on and so forth. Do you see it evolving through this whole journey into something new now, or this is just part of the evolution?
Yeah, I mean, I joined in early 2014, and it was pretty early in the life cycle of Pantera's venture investing. We had just finished maybe our sixth venture capital investment, and up until then, I mean, getting in on some of the earliest companies and sort of the best entrepreneurs in that crop has made us, very successful, for that vintage. I mean, Circle, Ripple, Bitstamp, Zappo. I mean, those are all companies that had done very well, and so
names.
household names. And so now we're at over 260 companies. So I've done over 250 companies with the firm, and it's been a wild journey. I mean, when I joined, I wanted to take my experience at my previous VC fund and really just say, hey, look, I mean, I want to be very thesis driven. I want to be very data driven, like I was at my last firm, and I want to really just think about what is needed for this ecosystem and try to figure out which companies have traction, which markets are significant, and then of course try to figure out the timing for each of these different spaces, so that we're not too early. And at the end of the day, I mean, you're going to be probably early in some aspects in this sector, because you just think that things are going to move a bit more quickly. And so I remember when even just fundraising, when we were raising for our fund, to even before deploying capital, our second venture fund, we targeted like $200 million, and we ended up with a 25 or so million dollar fund after 3 years of fundraising, starting in 2014 to 2017.
Yeah.
I mean, we took over 1,000 meetings just to raise $25 million over 3 years. And the biggest concerns were really timing, technology, regulations,
Right.
brand, and people just couldn't understand the potential. People would just ask me like, why are there 21 million Bitcoin? Like, is Bitcoin going to get hacked? Is the use case just Silk Road? I mean, it was very, very painful, but we persevered through it to raise enough capital to start making early investments in our theses. And our early thesis was really, well, look, I mean, the first thing that people are going to do is wanting to get cryptocurrency and hold it and quote unquote speculate. And it's starting off in the US. I think there was a huge push in Silicon Valley around Bitcoin, and that's kind of where like the cypherpunk movement sort of started. And then of course in Berlin and some other areas too, like that's where Toronto, Ethereum, and Gavin Wood, Polkadot, the guys over there in Berlin. And so this was going to happen on a global scale. So we started to map out the entire world. I remember pulling out a global map and saying, these are the geographies that make sense for crypto based off of inflation, based off of capital controls, based off of digital mobile penetration. And I remember highlighting in green Korea, which was actually our first exchange investment into a company called Corbit. And they're still around, and they just got acquired by Mirai. Exactly.
Yes.
But
I
we
know
started
the chief
doing that.
compliance officer there.
Exactly. So we were doing this in Latin America. We are doing this in Africa, and so I was traveling all around the world to find the best brokerages and exchanges in each of these geographies. And while I was doing that, I really got to understand how the banks think about cryptocurrency, how the regulators think about cryptocurrency. What are some of the interesting use cases that make a lot of sense? Who are the top entrepreneurs in each of these geographies? And it had led us to investing into most of the winners in these geographies, like, Bitso in Latin America, Valor in Africa, BitOasis in the Middle East, CoinDCX in India, and others. And so, that made a lot of sense. And then afterwards, I mean, I think the most interesting area was really just around like payments. It just took us probably 10 years later to finally see payments come to a certain level where it was more scalable and more institutional. And then, of course, we started to bet on institutional infrastructure fairly early on in the 2000 sort of like 16 to 2018 time period. I mean, some of the early companies like Anchorage and BitGo, it took a while for these guys to get going, right? I mean, they're just servicing mostly developers and retail, and then finally now institutions are coming in. The consumer side of things was really exciting for a period of time, as you remember, in 2021 and 2022 and the FTX time period. I still believe consumer will come back, but we did start seeing hints of institutional like infrastructure needed for institutions coming in. So right after everything went downhill, we started to look at companies that were focusing on DeFi, and then a lot of them pivoted to trying to figure out use cases that could bring institutions into the sector. And that's kind of how we stumbled upon Ondo. We saw an entrepreneur, Nate Allman. Now he's sadly passed recently.
Yes.
But we saw someone that had the institutional experience that could really sort of bridge institutions with DeFi and with tokenization. So we led the seed round and the Series A, and that really started our sort of journey into tokenization, and then also around DATs and also around payments. Finally, like being able to have the Genius Act give the green light for institutions to work with stablecoins, and now stablecoins being used for store of value in emerging markets and being used for FX, for cross-border payments. I would say that like tokenization is something that I didn't really sort of imagine probably like coming the way that it's coming, when I first, joined the industry. But payments is something that, got me excited when I first joined the industry. So to be able to see it happening, not just using like volatile cryptocurrencies like, Bitcoin, but actually using stable coins and on infrastructure that is scalable, I think is quite fascinating. So we really are seeing, because of the regulations, institutions coming in, and they are excited about stablecoins. They're excited about providing spot access to crypto, lending and borrowing, financial services, tapping into DeFi yield, and then of course like stablecoins and what it can mean for payments. But then of course with all of that, where crypto has really found the product market fit with fintech has really not a direct connection to the end customer, but really servicing the banks and the fintechs and the enterprises, where crypto's really reinventing the back end for institutional finance and fintech. And so no one really needs to know that it is crypto, and it is crypto that's making things faster, cheaper, more transparent. Eventually, hopefully, we'll have, again, more like NFT related or sort of like token related things in front. But as of now, it's just all on the back end. And then, of course, the other area that we're most excited about that has just really taken the world by storm is AI. And, we believe that AI and crypto really go together. I mean, I think there's a reason why, President Trump has really put people behind both of those technologies to really make sure that they are successful. And if you have them work hand in hand, they're going to be even more powerful together. And we really believe that AI is not going to be reaching its full potential without crypto, whether it's AI using the blockchain to store identities so that we can know what we're interacting with in terms of the agent side of things, like stuff that WorldCoin's doing, or whether AI is using stablecoin whales to basically set up wallets, be able to execute transactions. Because at the end of the day, I mean, we believe that there's going to be more assets on chain than off chain, and so it's going to be so much more efficient if these agents have wallets and can interact on your behalf across all of these different on-chain assets. And then on the other side, I mean, we think that AI is going to be very, very helpful for crypto, both from a security perspective, from a wealth management, trading, insights perspective. So we're really excited about the future. And so fintech, AI, crypto, that's the triangle that we're looking at.
Right. Amazing. Paul, there's so much to unpack there. So let me do my best to unpack some of them and drill down a little bit more.
Yeah, sure.
So I want to cover on that. I want to cover on stablecoin. I want to cover on AI. Let's start with stablecoin first, because you were covering quite a bit around the usage, the settlement aspect, and now also bringing FX on chain and so on and so forth. And you mentioned, and I just from reading your newsletter, I know you spend a lot of time traveling in region to really understand the local regulations, you mentioned capital control and so on. So my question to you on stablecoin, right? Genius Act is here. It's been here for a year. We're still going through the Clarity Act, so there's still some yield-bearing aspects that still need to be sorted. But nevertheless, it's brought a lot more clarity and also understanding of what it is. Now, the question, though, is right now, stablecoin is dominated in dollar, US dollar more specifically. And in your travel, in your interaction with kind of portfolio companies and institutions around the world, do you really see local currency stablecoins having a place to play? Because right now it is, I mean, I think the world can understand why President Trump has been pushing so hard on Genius Act, because it is to maintain the US dollar dominance, right? So you want to do it off-chain and on-chain. But local currency stablecoins, like in my conversation talking to regulators, some of them are actually saying, they're pushing back a bit and saying, actually, you know what? Yes, we're friends with you, but we don't want your currency to be dominating my economy as well. So what is your view in terms of local currency stablecoins, whether it's a big one like Euro or the British pound, or in Japanese yen, or a smaller one like Malaysian ringgit and Nigerian naira? What do you see? Do you see a place for those type of stablecoin as an interface to the US dollar from a cross-border perspective?
Short answer, I do see a place for them. What's happened so far is they are basically non-existent right now. And why is that? I mean, if you look at traditional currencies, I mean, the dollar still dominates, right? I mean, you still have, I think, a bit over 90% of all the currencies in circulation, the dollar, and then you have, it's spread out all across other currencies. But in tokenized fiat currencies, it's 99.6% or something like that dollar. I mean, I forgot we have over 300 billion fiat, one-to-one back stable, dollar-backed stable coins in circulation. And then the next currency that has any traction is the euro one-to-one backed, and that's at like 300 million. You know what I mean? So it's so far behind, and the reason for that is that, like, look, I mean, President Trump made a huge, smart, bold move in, you know, getting the Genius Act through, and that really, you know, is pushing, you know, the legitimacy of the dollar-backed stablecoin, and obviously benefits like the dollar from demand perspective. What we've seen in other geographies, for example, Latin America, especially, is, you know, countries in Latin America. I mean, Argentina, for example, like, we backed Ripio early on in crypto, and the reason why the entrepreneur started that company is the Argentinian peso had gone down to zero value 3 times in his lifetime. And so they need a better store of value. And Bitcoin has been that better store of value in Latin America. Now, again, like, it is a store of value, but it is still pretty speculative, right? Because it's volatile and it doesn't have, you know, as much utility because of its volatility, and people, you know, spending it on things like they need something that's, you know, stable, and something that's a little bit more familiar to sort of move out of speculation and really be just a bit more like store of value in Latin America. And the tokenized dollar has been that. We've seen it in Mexico and Brazil and Argentina surpass Bitcoin as a way to store value. And thus right now, like, you know, because of it being legitimized in the US, and because a lot of the governments around the world look to the US in terms of regulation and what to sort of follow, it's really turned the digital dollar into really, you know, the most interesting and the most widely adopted store of value outside the United States, and a lot of these countries that, you know, have volatile currencies. But I do think that it will change. We're starting to see a lot of use of stablecoins for FX, and it makes it a lot more efficient if you can, you know, not have to move from hard currency to a stable coin and then back to a hard currency for your FX. I mean, if you can sort of keep your money in local tokenized currencies, it's just going to be a lot more efficient. And of course, if you're able to then, you know, get yield on top, you know, we talk about the yield component, and, you know, Circle does it one way, but, you know, we can sort of see many different versions of these tokenized local currencies launch off either with or without yield. But, you know, I think as regulation becomes a lot more familiar to these local geographies, they start seeing an opportunity to, you know, to basically make some money off of tokenizing the local currency. A lot of local players want to transact with their local currency and support their local environment. And then, of course, as more companies start doing FX using stablecoins, they're going to actually push and create more adoption of these tokenized local currencies, where we do think that they are going. It's gonna look a little bit more like the breakdown of traditional fiat currencies that we have right now. Exactly.
Yeah. So it will take time. I mean, I remember when I was at Algorand back in 2019, 2020, we had a number of local currency stablecoins in the very early stages, right? But there was no usage, because why do you need a Turkish lira to buy Bitcoin? Like, you know, stablecoin to buy Bitcoin? It didn't really make a lot of sense. You have two volatile currencies that made it very difficult. So I think we do see a lot of differences now, especially since a lot of the regulations do have capital control actually built right into you know, their regulatory framework, and that will in some sense prevent the overflooding of U.S. dollar stables onshore, and that certainly could have an opportunity for local currency stables to increase in circulation, especially in the locale, and also potentially from a regional perspective. So, got that one. Okay, so let me move to the second one. You guys got into Bitcoin very early on. You touched on your Pantera Bitcoin fund. I was astonished to hear that you bought it at $65, right? So that's amazing. Here's the question, though, right? If you look at the latest cycle, the current one, I would call it the latest cycle that we're in. It started with the launch of the Bitcoin ETFs. And really pushed a lot more institutions to start having an allocation into Bitcoin as an asset. And then, of course, certainly with President Trump's administration, continued to push that through. But of course, many would say we're in the bear market, right? The Bitcoin has lost roughly half of its value from its height. And where do you see it going? I mean, yes. Those of us that have been around long enough, we know there's peaks and valleys and whatnot. Where is it going? Is it losing steam, or it just needs time to pick it back up? Because what is that external factor? Like, we already have the institution now. We already have a president that's all about it, and they still haven't really pushed it. So what other things can push it into potentially going into the right direction again? I'm not asking you to predict prices. But I'm really asking for more forward momentum point of view.
Yeah, I do believe that, what President Trump did in terms of the strategic reserve is extremely important. We do see other countries following suit. The ETFs are a huge milestone. And then, of course, the digital asset treasury companies, right? Using the public markets, financial engineering, be able to eventually, even create cash flow that comes into in real businesses that get tied to these companies that are able to generate revenue and generate more Bitcoin or cryptocurrencies. I mean, those are all things that really contributed to the rise of Bitcoin and some of the larger market cap tokens in this last pump before everything started coming down. But at the end of the day, I mean, there is this thing that called the 4-year cycle, and we thought that the 4-year cycle, that concept might be over because of just inflows from institutions, but we've been a bit humbled that, if people have it in their mind and it's looming there, that it could actually still just kind of manifest and come to fruition. So we do think there's a little bit of that sort of mental thought that is kind of creating a bit of a bear market. That in addition to, of course, like, what's going on in terms of the macro environment. So again, Bitcoin has shown to be, a bit of a, now that institutions are coming in, a risk on asset. And with the wars that are going on, and with, sort of inflation being the way that it is, I mean, that's not, it's not helping, for the cause. So we do think that 4-year cycle, mixed, being over, mixed in with, eventual, like, better macro conditions, should really give us a better shot at seeing. And the third thing that has happened too is AI. So even the investors that have come into the Bitcoin ETF, I mean, some of the outflows we believe are going into some of the AI stocks, and maybe some of these like late stage private deals for AI. And so, we do think that, as some of these AI companies go public and there's a bit more liquidity there, in addition to folks just starting to realize that some of these valuations for AI, while again, like, could be justified because of just the market potential of what these AI companies could really do, there's just a lot more value in investing into crypto right now that also has a very significant impact on the world and the financial economy. And so we do think that macro, we do think the 4-year cycle, we do think a rotation from AI back into crypto. And then, of course, just more use cases, I think, are really going to sort of like get us, be all the catalysts that get us out. Hopefully sometime soon, maybe later this year, next year.
All right, so that's a natural transition into maybe my last question to you. And Pantera does a lot of work and and analysis, and obviously investing and setting up these DATs, right? And you touch upon that earlier as well. So obviously, the world, even if those who don't know that and what they do, at least they've heard of strategy or MicroStrategy from before, right? And Michael Sayer and all the things that he talks about. So many of the DATs have been set up over this particular cycle, right? Many of them are actually under the value of their actually native token now. So is the DATs phase just a phase, or is that vehicle, especially to your point, perhaps tying this on-chain asset into the public markets, something that is here to stay? I mean, you guys also invested in, and I think also actually built the Solana, the Sol, that as well, right? HSDT. Maybe you can talk about that. Like, what is your view on that moving forward?
Yeah, we believe DATs are here to stay. They are a leverage play on the market, and they come in different forms. You have single asset DATs, which are the ones that we think have been probably most successful. And then you have the multi-asset DATs, more than one cryptocurrency in a DAT. Maybe it's also an index. Maybe it even has other types of assets. And, at the end of the day, I mean, the digital asset treasury company is still a new concept for folks. It really is the reinvention of the foundation, but instead of it being sort of opaque, in terms of how they operate and some of the fundamentals and all that, it is a foundation that is able to tap into the public markets and really be innovative in terms of creating value, whether it's using some of the financial tools to be able to borrow, buy more, be able to even like stake, be able to acquire revenue generating businesses, or build other sort of businesses, etc. I mean, it's really just contributing back to the ecosystem, and it's a lot easier to bet on a digital asset treasury company that is focused on one singular asset or one singular goal. And thus, for us, I mean, we mostly have made our bets on single asset digital asset treasury companies, knowing that there's probably going to be one or a very, very small handful of winners in the US and then in other geographies. And obviously we're looking for, geographies that have very strong, sort of public market activity and things like that. And so, Bitcoin, ETH, and Solana, had been the largest market cap cryptocurrencies. And so we really did focus a lot on those ones. And obviously right now, I mean, so, it does well when the markets are up and people are excited about crypto in general and those specific currencies. And so while we are seeing some of these companies trading below their 1x MNAV, I think at a certain point people are going to see that delta, right? In that they have way more assets than they're being given credit for, and eventually there's going to be mergers and acquisition, consolidation, or just like obvious buying opportunities to sort of get us sort of back to equilibrium on those. And then we really do think that as the markets pick back up, that's when these DATs will have opportunities to be a bit more offensive in what they can do, whether it is finding more ways to build businesses or sort of, generate more ways to sort of accumulate more of the token. So yeah, we do feel that there is a lot of potential, and it's actually been one of the value adds for our portfolio companies too, because while the top three assets are most prevalent in terms of DATs, we do feel that as this industry gets bigger and as we start seeing more tokens with fundamentals and ones that could be underwritten by institutional investors that are experience of helping companies launch DATs, launching a DAT ourselves will be very beneficial for them, so that they can actually have DATs within their ecosystem.
Got it. Okay, so obviously not investment advice, but the potential and the structure of these vehicles are certainly sound, and should have a way to run its course. Once the market somewhat recovers and starts to go in the same direction again. Got that. So last thing, Paul, for those that might be watching, and you've given a lot of insights around not only your investment thesis, Pantera's kind of history and so on, but also what are some of the most critical elements in this particular industry today. So if someone is building and they want to have a fund like yourself, right, to look at what they're building and be able to identify some unique aspects towards what their proposition, what are some of the things that you would advise them to really focus on so that they can get the attention from someone like yourself?
Yeah, at the end of the day, you want to go after big markets. You want to do things differently than how other folks are doing it if it's still really early on in terms of a new market, or if the certain incumbents are doing things but not as well, or that you feel like you can do things better. And then I think it's really just being extremely maniacal about having a product that people really love. I think that's basically it. I mean, if you have a product that people really love, hopefully like that starts, getting the word of mouth around, user acquisition. And then, that might be enough to raise your first round. And if you are, looking to connect with the VC, you could do a cold email. But I think your odds are much better if you go through someone that VC knows and someone that VC trusts. And so find one of their portfolio founders, and it's not as hard in the cryptocurrency space because the space right now is in a bear, and everybody has to work together and is a lot more collaborative. But you go to another entrepreneur within a portfolio, you ask for advice, you show them your product, you show them your vision, and if you get them excited, then I think they're going to be excited to potentially show you to their investors, and that's a great way to get in. Once you start talking to that investor, I think if you can really lean in with your product, if you can lean in with your vision, and you keep leaning with your hunger and your perseverance, I think that goes a long way.
Paul, really amazing advice. I hope those that are aspiring entrepreneurs and building in this space will hear not only your kind of industry insights, but also more importantly, how to build a company and how to approach a VC like yourself. So thank you so much for your time. I wish we had more time, but very often I think having very concise, specific topics that we cover is probably going to make the best use of everyone's time. So again, thank you so much for coming on the show, and I look forward to seeing you again soon.
Thank you very much, Sean. I really appreciate it and love the work that you're doing.
Thank you. Take care, Paul.